Part 5 of chapter on money and money supply is going to deal with traditional and new RBI indices of money supply. The different monetary aggregates as defined by RBI includes M0, which is also known as reserve money. It includes currency in circulation plus bankers' deposit with RBI and other deposits with RBI. Currency in circulation comprises of notes in circulation, rupee coins and small coins. Bankers' deposits with RBI includes the balances for maintaining cash reserve ratio and as working funds for clearing adjustment in the current account of RBI. Other deposits with RBI includes net reserve bank credit to the government, Reserve Bank credit to the commercial sector, Reserve Bank claims on banks, plus Reserve Bank's net foreign assets, plus government's currency liabilities to the public, minus Reserve Bank's net non-monetary liabilities. M1, which we are more concerned with, comprises of currency with public, demand deposits with banking system and other deposits with RBI. Now, as we know, currency with public is currency in circulation less the cash held by bank. Demand deposits includes all liabilities which are payable on demand, which includes current account deposits, demand liabilities portion of saving bank deposits, margins held against letter of credit or letter of guarantees, balances in overdue fixed deposits, which means the fixed deposit has already matured but the depositor haven't claimed it as of now, cash certificates and recurring deposits, outstanding telegraphic transfers, mail transfers, demand drafts, unclaimed deposits, credit balances in the cash credit account and deposits held as a security for advances which are payable on demand. Demand deposits with the banking system and other deposits with the RBI are together known as deposit money of the public. M1 is also referred to as narrow money and it is one of the most liquid form of money because the major component of M1 is the currency that is being held with public. M2 comprises of M1 plus saving deposits with post office saving banks. M3, which is also known as broad concept of money supply, consists of M1 plus time deposit with the banking system. Now, time deposits are those which are payable at a particular period of time and not on demand. They include fixed deposits, cash certificates, cumulative and recurring deposits, time liabilities portion of saving bank deposits, staff security deposits, margin money held against letter of credit if not payable on demand, India Millennium deposits and gold deposits. M4 includes M3 and all deposits with post office saving banks but excludes national saving certificates. These are basically the traditional indices of money supply as defined by RBI. The new monetary aggregates defined and compiled on the basis of recommendations of the Working Group on Money Supply under the chairmanship of Dr. Y.V. Reddy are NM0, NM1, NM2 and NM3. NM0 is a reserve money or a monetary base, and its components are same as M0, which are defined under traditional monetary aggregates. NM1 is termed as narrow money, while NM3 is termed as broad money. The report on these new monetary aggregates was submitted in June 1998. The working group recommended the compilation of new monetary aggregates on the basis of residency and in line with the international practices. As per these recommendations, the non-resident deposit flows would be part of international capital flows and so would be part of balance of payment considerations and would not constitute the domestic demand for money. Hence, NRI deposits flows would not be considered as part of money supply in the country. These deposits include non-resident repatriable foreign currency fixed liabilities with the banking system in India, such as foreign currency non-resident repatriable bank scheme and resurgent India bonds. Non-resident rupee deposits are though included in domestic money supply. The components of NM0 and NM1 are same as M0 and M1, which is NM0 will comprise of currency in circulation, bankers deposit with RBI and other deposits with RBI. NM1 will include currency with public, demand deposit with banks and other deposits with RBI. While NM2 represents M1 plus short-term time deposit of residents with a contractual maturity of up to and including 1 year with the banking system. The components of NM3 are NM2 plus long-term time deposits of residents plus call or term funding from non-depository financial institutions.